On this week's episode of the Stuff Your Accountant Isn't Telling You podcast, we are going to be talking about 3 tips that you can use to effectively manage your cash flow and help your business make sure it continues to stay on top of things. Because one of the things that we talk about here on the show is cash is king. So stay tuned as we dive into this week's episode. Welcome back to another episode. I am Lola Turner, your host, and with me, I am joined by my co-host, Terrell Antonio Turner. Hey guys, welcome to another episode. We are excited to be here, and we're excited to jump into this week's topic. But before we jump in, a couple of things I want to talk about. First of all, super nice outfit.
Thank you.
Give us some outfit details. For those of you that are listening on the podcast audio, Terrell is dripping in some traditional Nigerian attire. So please give us some details. Where did this outfit come from?
So I will say is my wife is half Nigerian, half Kenyan, and her father is 100% Nigerian. And one of the things that I think it has been his personal mission is to dress me like a Nigerian businessman.
Yeah.
I think that has been like one of his assignments that he's taken on since the day we got married. And so I am always dressed in these amazing attire. So if you see me on the road, because we're going to be speaking around the world, there are going to be different speaking engagements happening in Asia, throughout the US, Canada, Europe. And so if you see me speaking on the road, you see me dressed like this, you understand the story.
Right, yeah.
My father-in-law wants to dress me like as he puts it, a proper Nigerian businessman.
I am actually curious as to what you're going to get when you go to Kenya in December. Like, what is going to be the takeaway? Because we're excited. One of the locations we're going to be visiting in December is Kenya. So you get to meet 50 plus of my family members in a couple of months. And we're pretty excited about that. But I'm really eager to see like what the aunties are going to be giving to you as kind of like hey, he is our son. I don't know. Maybe you might get the Kenyan flag wristband, or you might get something a little bit more fancy. But I feel like, every part of the family wants to claim Terrell is like, you are one of us now, right? So like my dad is like, you are a Nigerian son. You are my Nigerian son. And my aunties are like, he's a little man. So I feel like there's all of these, combinations. So it's interesting to see how that's going to unfold.
It is.
Yeah.
And speaking of that, because I'm pretty excited about just, as we travel around these different cultures, and that's one of the things we're doing with the show,
right,
is really making the show more relatable wherever we go.
Exactly.
Like, we're traveling in Nigeria, creating content that's relevant for our audience in Nigeria.
Mm-hmm.
We're traveling in Kenya, making content that's relatable to the audience in Kenya. Now, it will still be relatable to our global audience.
Right.
Like when we're in Asia, making content there, like we're going to be filming in the Philippines. We're going to be filming in Greece, which I'm really excited about.
Greece is gonna be fun.
We're also going to be filming in different parts of the U.S. Like I said, we're going to be in Kenya in December. So, there's a lot of things happening, a lot of great things. And really, it's just, filling in, telling people what their accountant isn't telling them.
Exactly.
And really just making it more relatable and more useful.
I agree. I'm excited. And I think one of the things that feedbacks I've gotten about people that have listened to the show, and it's not just, our perspective. This is feedback I've gotten from listeners of the show where they're like, man, like, I have an accountant. I've listened to the show, and I feel like I've learned a lot more than I've learned from having an accountant the last 4 or 5 years. And so for us, we're like, that is great, because that's the whole name of the show. Stuff your accountant isn't telling you. It doesn't mean that, we're saying, hey, go dump your accountant. In some cases, people have great accountants. But, one of the things Terrell always says is if you have a crappy accountant, we have a whole fireyouraccountant.com website that helps you make sure you get what you deserve. But I think the great thing about the show is it always gives people, it's kind of like if you think about dating in a relationship. If you don't really know what great looks like, you don't know what to look for when the time comes. Yeah. And so I think for us, we always aim to give our business owners the information that they need to make an informed decision to figure out, is the person that I'm working with a good fit for me? Are they helping give me the tips that I need to advance my business? If the answer to that question is no, you have someone, and both of us can give you that guidance, because not only are we accountants, but we're also business owners, and we also have employees of our own, and we also offer law firms
Hmm.
services. So we're kind of covering the whole scope, and we can tell you, hey, this is what's going on in the market. This is what's good. This is what's not so good. This is what to look for. And I think really we provide, and this is not just me saying this, um, we provide some really, really good, practical, simple support to
Hmm.
business owners that I think you can take and go run with, and you're definitely going to see results in your business. So,
Yeah, I mean,
yeah.
I think that's very true because I think this topic of cash flow is very important
Hmm.
because, we're seeing so many different dynamics happen. Like, even if we go back to, let's say, 2020, when you think about the impact of
Oh, yeah.
the pandemic exposed a lot of businesses, or let me say it, put it this way, it exposed their cash flow weaknesses
Yeah.
in a ton of businesses where businesses started to recognize like, wow, we have problems.
Hmm.
And some businesses didn't survive.
Hmm.
And then, there was a lot of funding that came out, and the government kind of filled in a ton. Like, the
Yeah.
government poured billions and billions of dollars back into, the economy, back into the market, back into businesses. But when that government funding slowed down, what happened is the problem got revealed again, to where
Exactly.
business owners started realizing like, oh, well, I'm not getting another grant, or I'm not getting another refundable loan. Like, what am I going to do?
Yeah.
And it's something that I believe can be avoided.
Hmm.
And so what I'm excited about, like, us talking more about in this is, sharing those, what we've learned and what we've seen of how do you identify the weaknesses?
Yeah.
And then, hey, what are some things you can do to address those weaknesses? Because if you do not address those weaknesses, eventually it's going to catch up with you and your business is going to really struggle.
That's a really good point. And I think a way to do that and to be on top of it, because I think a lot of times, regardless of how well intentioned you are in keeping an eye out of managing all the 16, 17 pieces of what's going on in your business, you just can't do everything, which is why it's important to hire an accountant. And for those business owners that are listening that have an accountant, leverage your accountant to help provide the information that you need, because I think in a lot of cases, even when we were talking to people and we were helping business owners get funding and
Hmm.
some of the credits that the government, or some of the funding and grants that the government was offering, a lot of times it was just, man, I just didn't really have the time, because you were busy doing other things, running your business, and you just never really had the time to sit down and say, okay, what is going on, and just even look ahead and just say, okay, this is what's going on in my business. This is where I'm going if I continue to do the things
Hmm.
that I'm doing. And if I don't make changes, I'm at risk here. And I think a lot of business owners just didn't have the time to do that. And part of that was, in my view, because they weren't properly leveraging their accountant. They didn't know what to ask for. So they would just get, a report in a month. They wouldn't know how to read it. Their accountant may not do a good job of explaining it to them. And then they were just left kind of like, all right, so what does this tell me?
So I want to dive into that a little bit because you keep using the word accountant. So for some people who, they may say like, hey, I have an accountant. I talk to this person. They get my taxes done, but
Yeah.
I'm not getting that. So let's talk a little bit about that. Like,
Hmm.
do you believe that all accountants understand how cash flow works?
Absolutely not.
Now, let's talk about you specifically.
Mm.
When you studied
Oof.
accounting in school,
Yeah.
you became a CPA.
Okay.
Now, how long into your career did it take you to become a CPA?
I was probably what, 3, 4 years into my
So
career?
4 years into your career.
Yeah.
At what point in your career did you actually learn and actually understand what cash flow was?
I would probably say you're 7 or 8. Yeah.
Okay, so 4 years of studying as an accountant,
Yeah.
and then 7 years of actual working, and by that point you finally understood accounting. I mean,
Yeah,
or not accounting,
cash flow.
cash flow.
Yeah, and I think the reason for that is because, of course, it's taught in school, but I'm talking about practical application was
Hmm.
7 years. 7 years into my career. And to be honest, part of the reason why I was forced to do that is because I became a CFO for a small part of the business, and I really needed to understand like how was I doing on some of the targets that we had, And the region I was supporting, the Americas region, was driving what, more than 50% of the revenue. And so in addition to driving revenue, of course, if you're driving most of the revenue, chances are you're probably driving, a lot of high margin products, which is going to impact your cash flow view. And so, yeah, year 7 before I actually had to do it, because to be fair, you can go through doing accounting and closing books, because I was closing books and reconciling stuff like maybe 2-3 years into my career. But in terms of actually saying, okay, forward looking, or just even doing a cash flow forecast, or even understanding what my cash flow impact was, it took me about 7 years to get there.
That's something that I think is very common with a lot of accountants, is that they study the technical aspects of accounting,
Right.
especially those that do tax returns. Like, they study how the tax law, how the tax rules work, but they don't really spend much time thinking through, okay, practically speaking, what does this mean for cash flow?
Right.
And I remember having a conversation with someone, because I learned it probably about 6 years, well, I'd say probably about 4 years into my career. And a lot of that because I was working in investor relations and I was talking to a lot of Wall Street analysts, and they were asking questions, and I realized, like, oh my gosh, like, I don't really know the best way to answer this. So I had to actually go back and study, like, okay, all right, the difference between profit and cash flow.
Yeah.
The difference, between, like, hey, what my revenue was, and hey, what's my cash flow look like? And when I started breaking that down, I realized, like, man, there are so many accountants who call themselves accountants, and business owners are relying on them, but that accountant has no idea how this works.
Let me ask you an honest question here. Do you think, as an accountant should know what a cash flow forecast is, or even just cash flow? Or do you think that's more of on the finance side?
No, I absolutely believe that accountants should understand cash flow, because, I mean, if you think about it, a cash flow statement is one of the key financial statements.
That's true.
And it's one of those interesting things. Like, I started off working in public accounting with one of the, the big four. I worked with one of the world's largest accounting firms. And to be honest with you, I didn't really understand financial statements.
I was going to ask that question.
And our entire job was around auditing so that we can produce financial statements that investors and the market can use. So we were auditing companies creating these financial statements. But if I sat down and I talked to some of my coworkers, we didn't really understand we didn't understand how to think about it through the investor, or through the businesses, or through someone who actually used the information. And I think that's a sad thing for a lot of accountants. They don't actually use the financial statements that they actually create.
That is really, okay, that's a really good point. And I want to dissect that just a little bit. The point that you made just now about an accountant not really using what they're helping create, I think is a problem, period.
Yeah.
And I think, and when I say it's a problem, period, and for those of you that are listening, when I talk about an accountant, I'm just saying, in this case, let's assume someone who provides bookkeeping services, which bookkeeping services is basic stuff that you don't really need an accounting degree to do, right? I mean, I would agree with that. You reconcile, you organize transactions, you categorize things. And so oftentimes I think a lot of professionals who do accounting work, let's say it that way, are oftentimes so focused on the detail work and not really understanding, okay, how does this fit into the big picture? Which is where I think the big picture is where business owners really need help the most. It's, okay, how does these transactions fit and help me, okay, based on how my business did, how do these transactions help me figure out what I need to do next, right? And so I think that oftentimes is the missing piece, and I think that's why a lot of business owners are frustrated, because they might have an accountant or a bookkeeper or, I don't know, a tax accountant, whatever the responsible financial analyst, but that person is so focused on, these are my responsibilities, this is what I do, or maybe a very small part of, still important, but a very small part of what I would say a business owner really needs to make decisions in the business. It's kind of like saying, hey, I will give you right? I'll give you one part of the equation, but I won't really give you the second part of the equation, the connection that you need to unlock it. So like, for example, if you think about a padlock or a lock, and then you have a key, I will give you the padlock, but I won't give you the key, because ultimately as a business owner, you need the key to figure out, all right, how do I take this information you've given me and do something with it?
Yeah.
And I think that's a really good point. And I think part of it is because when you start your career, like I just said, they're not really trying to tell you, okay, practically speaking, like this is how you take this financial statement and this is how you interpret it. And I think also for you, the reason why you were able to do that is because one, you were an investor relations job, which absolutely requires you to do that because you're speaking to people who are asking questions about how the business is performing.
Yeah.
And then I think too, the fact that you spent a considerable amount of time studying other companies, how they were performing, what the numbers said. And I think that is really a missing part of, I would say, the accounting profession, because people are so focused on the pieces, but not really putting it together to say, okay, what does this mean for someone running a business?
Yeah. And I think it is a process because, just like any profession, I mean, if we take engineering, like no one comes in on day one and they're ready to build a car from scratch.
Agreed.
I mean, you may start off on, let's say, working in, the electrical systems where you're learning that piece of it. And then later on, maybe you move into some of the more mechanical pieces of how this works with this. And then maybe you start moving into materials of like, hey, what type of metal should we use for the frame of the car and stuff like that. And then maybe you move into the design and stuff like that. Now, over time, you've picked up all these pieces. And so one of the things that I tell business owners is, like, when you're picking an accountant, you kind of got to understand, is this accountant, are they just good at this one individual piece?
Yep.
Which most people, when they say they work with their accountant, that person is doing the tax work.
Right.
That person understands that piece, but it's like, do they understand the other pieces? Now, it's not to say that you don't need a person who understands tax, but what I will say is, maybe you need an additional person. Maybe you need, hey, a tax person. Maybe you need a bookkeeper. Maybe you also need a CFO, because the CFO is the one who has had enough experience to bring all the pieces together.
Yeah.
Now, sometimes that person can be the same person if they have the experience to do that. But if not, then you really need to say, hey, you know what? Maybe I need to create like a team of finance people that can help fill in those three essential goals of, hey, a person who does the bookkeeping, person who does tax, and a person who does CFO. Because I think that starts to help, because specifically to our topic today in cash flow, one of the areas that I see companies struggle with a lot is accounts receivable, is where they do the work and they bill the client, and the bookkeeper, or let's say the technical accountant, may be like, okay, all right, we've earned the revenue, but you need somebody to say, hey, have those people actually paid those invoices?
Right.
Like, when are we going to follow up? Like, hey, this person is 15 days past due. When are we going to follow up with them to get them to act so we can actually collect? Because if we're doing the work, but we're not getting our customers to pay the bill we sent, then from a cash flow perspective, you're going to struggle at some point.
Right, agreed. I think that's a really good point. And I think the accounts receivable one is important because, like you said, I think AR is the lifeline. Like the money that comes from the money that you make from doing business is the lifeline that's going to help you sustain and run your business. And one of the things I think I would say, the AR, this accounts receivable one, I would say is the first tip for a business owner, I think, when you're trying to manage your cash flow. But I think one of the tips that I give our audience, or that I would share with our audience, would be when you're looking at that, because like you said, you need someone to follow up 15 days, 20 days, 30 days, understand what's going on. Is there an outstanding deliverable? Does something need to be done? And one of the things that I oftentimes would recommend is, if you have an accountant, it might not be within the scope, or let's say a bookkeeper, it might not be within the scope of what you paid or hired them to do, but maybe just have a conversation with them and say, hey, is there a way for me to get on a weekly basis, on a monthly basis, on whatever the cadence is that you want to establish, some sort of AR report, something that can be downloaded depending on the system you're using relatively quickly. And can I just get a view of how I'm doing, what's outstanding, and whether it's, hey, I'm going to pay extra a month to my accounting support for that. That way you have something that you're reviewing. For us, I would say, for the clients that we do this for, because we use LiveFlow, that's a relatively quick process. So for example, if someone wanted us to support them with that service, then it's, hey, live flow, update the report. It's something that we can set the cadence of how often we want it to refresh. And then they have the link and they can go in at any given time based on the cadence and just check and say, hey, okay, what's outstanding in AR? Who do I need to follow up with? Because I think sometimes as an accountant or as accounting help, sometimes it's hard. Sometimes we want to drive our business owners to a certain behavior, but I think it's like, how do you make it easier for them to do their job? How do you make it easier for them to follow up? And if that's a service that, let's say, your accountant offers, I recommend as a business owner having the conversation to just say, hey, you know what? Is this something that you can set up for me on a monthly basis or weekly basis? And if they have a tool like LiveFlow that automates it, then it becomes less work on their end to be able to support you with that.
I mean, and I think that that's a really good point, because part of management or managing a business comes down to having access to the right level of data.
Yeah.
And I think if you have the access to the right level of data or the right level of indicators, you can tend to operate things well. I always tell people, I compare it to like driving a car. I mean, I can't imagine what it was like in the older vehicles when you didn't have a gauge on the gas meter. Like you had, because imagine that. Imagine you get into a vehicle and you have no idea how much fuel is left. I'm like, even when you look at electric vehicles, if you didn't have anything that measured how much battery you still have left, you got in the car and you just had to hope you made it, or just like, well, I'm just gonna stop and put gas in it anyway, or I'm gonna charge it up anyway, even though if I don't know if I need to. Now, if you're just doing short trips, maybe you can survive. But if you're trying to go on a long trip, let's say you're trying to drive from, let's say, New York to Dallas, which is, a pretty long trip. At some point, you're gonna have to stop to refuel or to recharge. But if your gauge isn't working, you are probably either gonna run out of gas at some point, or you're gonna stop more than you need to, which means your trip is just gonna be that much longer. And so I think about the numbers the same way, like when it comes down to any business, when it comes down to monitoring your cash flow, like the reporting is critical. Like you need to have certain things in place that can trigger that. And like one of the things that I'm working on with a client is building out a cash flow forecast to where one of the things that they struggle with is like, I want to be able to predict what the cash is going to look like. And so what we ended up doing is we looked at, okay, all right, somehow we have to combine your actuals of what has already happened with some projections. And so the way we ended up doing it, like, the tool you mentioned, LiveFlow, is we used LiveFlow to pull in all of their historical actuals. And then we kind of built the formula in there to say, okay, all right, LiveFlow will pull in all of the actuals automatically. And then everything afterwards, we'll use the forecast that we built in there. And some of the things we put in there, like, hey, the number of new customers that they bring on, because we kind of knew what their average, revenue was per customer. And then by studying their AR, we knew like, hey, it usually takes you about 25 days to collect when you make the sale.
Yeah.
So it's like we could forecast how many customers you plan on bringing in. We knew their average revenue, and we knew it takes you about 25 days. So with that, we can pretty much forecast how much money you're going to have coming in the door based off of those factors. And then, like I said, when we combine that with LiveFlow, which automated pulling in the historical, one of the things that they could get is they can get an ongoing read to where they could almost predict 6 weeks out to see, hey, are we going to have a cash problem? Exactly. And if they were going to have a cash problem, what they knew is either we need to go get a line of credit or we need to actually increase our sales activity because we need more customers coming in because we're going to have a cash flow problem within the next 6 weeks. And I think when you start to have those gauges and, like I said, you're using tools, whether that's, someone, I would say if they're really, really good, they can build it from scratch. Now, I would say is I'm really good at building models, but I'm not building them from scratch every time. I'm using tools like LiveFlow and then also building in some formulas because I'm like, just like your car, your business owner needs a gauge on, I need to be able to see when a problem is going to happen before it happens because That way I have time to do something about it.
Yep.
Because like I said, if you're driving, a vehicle on a long road trip, you don't want to know too late, like when you're in the middle of nowhere, now you've run out of gas. It's just like, hey, this isn't
Yeah.
as helpful now.
Yeah, and I think your example of the path, even if you think about electric cars, one of the things that I recently found out about Teslas, and I don't know if other cars have the ability to do this, other electric cars, is when you put in directions to your destination, the Tesla will actually show you charging stations along the route of where you need to stop. This is when you need to stop. This is when you need to charge, like before you move on to the next. Because hey, if you go further than this destination or this charging station, you're probably going to run out because there's not going to be any sort of charging stations from here to there. And I think the cash flow forecast actually acts as almost like, if you think about a Tesla, like the charging stations where you need to stop, because you know very well, based on what you said, you pull in the actuals. And I think LifeFlow is only available for QuickBooks right now, right?
Yeah.
So, okay, so if you're using QuickBooks to monitor, if you're using QuickBooks as an accounting system and you're doing a cash flow forecast, like you mentioned, the actuals help you kind of project where, okay, this is what I've spent, this is where I'm going, the cash outflow, but then you also have the inflow of, okay, based on your AR, what's the typical amount of time it takes people to pay? Like that then helps guide you, like, okay, you can kind of see the ebbs and flows, like where's the trend? Where are the commonalities? What do I need to, like you said, how do I need to, move and change my sales pattern? Like, hey, do I need to drive more sales in this month based on what I know, based on how I've historically performed? And so I think your cash flow forecast is a perfect example of the indicators that you really need to kind of gauge so that you're not running out of cash. Like, and by the time you find out, it's too late. You're like, okay, so we don't have money now. And that's oftentimes what happens for a lot of business owners is by the time they find out, it's too late. And then you're scrambling and you're frustrated and you're carrying really unnecessary stress, which is a lot for a business owner to have to navigate that and deal with just keeping the business afloat at the same time.
Yeah, absolutely. So, I mean, I do think that you said that the first tip we talked about was AR, is having a process for that and following up. The second one I think is what we just said about, having a tool that can kind of give you a gauge, like having a cash flow forecast. So I tell every business owner, if you're working with an accountant or you're working with a bookkeeper, I would say ask them to help you create a cash flow forecast. Now, if they don't know how to do that, then you need to find, whether it's a fractional CFO or financial, you need to find someone who can help you create a cash flow forecast, because it may not necessarily be something that, hey, you need to hire them and they need to work constantly. Maybe they can create the tool and then your accountant can take it from there. But if not, then you need to I would recommend finding a bookkeeper who has the ability to do bookkeeping and kind of CFO services, because that cash flow forecast tool is going to be critical. I mean, I was working with a law firm and we built out a cash flow forecast. And so we built it out to look out about 8 weeks. And one of the things that it helped them understand is when they were going through a slower period of time and we forecasted out, we could see, hey, your cash is going to drop. One of the things that they can do is, 8 months in advance, they can start making changes now to where they address that problem, to where when the time came, they either had extra money set aside to cover that shortfall, so the business wasn't disrupted. And so I would tell every business owner, you need to have a cash flow forecast, because there's so many businesses that struggle because they just don't have that.
Yeah, and I would say also, last tip on that one is just be comfortable. I think traditionally accounting services haven't really been seen as a la carte. And by a la carte, I mean like it's just kind of like, all right, you have this accountant, you're with him for 50 years. You take your taxes to him or your documents to him at the end of the year. He does some sort of magic in the back, brings you back, tells you what you owe, you pay that. It's like the accounting profession has evolved so much. And I think business ownership and just the industry of doing business has evolved so much that you need to learn to leverage as a business owner the services that work best for your business. So like, for example, not being afraid to hire a CFO, even if it's someone you're just saying it's project work. Hey, these are the things I want to accomplish. I need a template for a cash flow forecast built out. I need, I don't know, as an example, spend by vendor. Like I need these 3 things, and these 3 things can then be things that they set up for you. And then you can take that stuff to then go take it back to your accountant and be like, hey, this is what I want managed or whatever the process is. But I would say, I think companies that I've seen that have grown or that are stronger and are better are companies that are not afraid to really leverage the type of accounting services they need to help take their business forward.
Absolutely. I mean, I think that is the reality of where we're going,
Yeah.
is having an a la carte option. Because I think about, like, when I was younger, when it came down to watching cable television, like if you wanted to see, all these channels, like you had to buy the package.
Exactly.
There
Even if
was
you only
no
wanted
option.
one.
Yeah, there wasn't the only thing that you can buy as an individual one-off was pay-per-view.
Yeah.
And that was more so for movies or like major sporting events
Yeah.
and stuff like that. But all the other channels usually came in a package. Like there was no way for you to like download just HBO and I just want to see only HBO shows.
Right.
Like you had to get like, different packages. Now, eventually HBO moved into subscriptions where it was standalone. And I think a lot of accounting firms are moving that way, because before, in order for you to get a cash flow forecast, you had to hire a CFO,
Right.
which is expensive. I mean,
yeah.
a CFO is going to cost you minimum, I would say, $175,000 a year to hire a CFO. Now we live in a world where you may not need everything that a CFO does. Like I was working with a law firm. I had a call with them last week and we talked about it. I'm like, you don't really need us to do ongoing CFO services. Really what you need is you need us to create a cash flow forecast for you. You need us to do a cash flow analysis, and you need us to incorporate your non-finance information like your productivity to really analyze your pricing strategy and really kind of build that out. I'm like, we can do that in about 2 to 3 months. So my proposal to them is they'll pay us $2,500 a month for the next 3 months. We will build out all of those tools, and then I'm going to train someone on her team how to maintain those tools moving forward. To where it's like, you don't have to spend $150,000 or $175,000 to hire a CFO. We can build the tool out for you and then let your team manage it. And then, hey, 6 months down the road when, hey, you have some different questions, let's just meet. Let's have another, let's revisit it. Let's have another meeting.
Right.
Because I do think that a la carte approach that's going to be the secret sauce for a lot of medium and smaller businesses, because you may not be in a position where you can hire someone for $175K,
Right.
but you do need the skill, or you need some of the stuff that a CFO can provide.
Yeah, that's good. I absolutely agree with that. And I think I think about it even now, how a lot of companies, like you mentioned, have pivoted to offer a la carte options, because the reality is, as a business owner, you don't need the whole pack. Like you might not need the whole package. And the other thing also, I just did some quick math as you were talking about, like the law firm example, is like worst case scenario, let's say, the 3 months, that's $7,500. And then let's say maybe over a couple of more months, let's say maybe they need another month of support or some work. Like you're out what, $11,000, $10,000, 10 to 12,000, depending on how many hours you support them. But it's like, that's still a lot cheaper than paying someone $175,000 a year. And then you feel frustrated because you feel like you're not getting the value and you're spending all of this money. So I absolutely think when it comes to, for small to medium businesses that you're growing, you need the support. You just cannot afford, or even you're not at the point where you need to hire someone full time. Definitely leveraging those contractual a la carte, like, hey, bring someone on to help you really get the support that you need. So
yeah. I mean, what was funny is I was working with another law firm. We were looking at some stuff on Friday, and one of the things that she was saying, a bit frustrated because, like, she wasn't seeing the amount of cash that she was expecting in her bank account. And so we did a deep dive. We really dug into the data to where it's like, all right, let's look at your cash flow. Let's see the cash flow statement. Helped me understand, like, hey, where is the cash going? And then when we understood, all right, here's where the cash is going. And then I'm like, let's dig into this a little bit more. And then we identify, like, here's what your problem is. And through the data, I was able to narrow it down to say, hey, you need to have a conversation with this specific staff member because this is the staff member that's causing the shortage. And I was like, honestly, you're working harder than you need to because what you're doing is covering up their shortfalls. And it was through the data that we could see that and we could identify that because, I do think that's the last kind of tip that I would give for, in this conversation we're having today is that whatever information you analyze, whatever things you look at, whatever your accountant builds, it should come back to a very specific action that you can take to address this problem.
Ooh, that's good.
And for that client, it was, hey, you need to have a conversation with this attorney because either that attorney doesn't have enough work to do, or that person is just being pretty lazy. Because when we looked at the numbers, I'm like, the numbers are telling me this person's performance is the issue.
Right.
And by narrowing it down to that, she walked away saying like, oh my gosh, like this makes it so clear.
Right.
I now know, I know exactly what I need to do.
I love those moments. I love it when business owners like, you know what? I get it. Like, this makes sense. Oh, this is what the issue was. It is so fulfilling to like hear that because you're like, man, that's how it should be. And so that third tip I think is so important is just leveraging the data and leveraging the information that you receive to actually understand what you need to go do next. Because you can do a cash flow forecast. You can collect on your AR. But like if you don't understand how to use that information and how to take that information forward, or let's say you can do an accounts receivable report and you can get all those reports and have all the data. But if you do not know how to go actually deploy this and do something out of it, then it's just going to be a waste of time. And you're spending all this money hiring someone and you're not taking advantage of it. So I absolutely think that is such a great tip to wrap up the episode with. And yeah, we're excited to bring the team and bring our audience more content. Any final thoughts before we close for today's episode?
Absolutely. I mean, I do think, when it comes down to cash flow is a game of that requires a considerable amount of attention.
Right. Agreed.
And it's not something that, hey, you do it once and then, hey, we're good forever.
It's like you have to, it's a constant monitoring. It's a constant monitoring.
And that's why I think, like I said, the most obvious one is around AR, making sure you're collecting on that. The second thing that I think is so important, because it is such a constant game, is really looking at your, having the right tools that give you the right indicators, like the gas meter on your vehicle or like the energy meter on an electric vehicle.
Right.
Like it lets you know, hey, how much fuel do you still have left before you run out? And you need some type of tool that gives you that gauge. And then I think the third thing is, after you have the tools in place, make sure it gives you very specific indicator. Like Tesla has, made it more advanced to where Tesla will tell you not only that you need to stop, it'll tell you where you can stop.
Right.
And that's what you want to make sure that your accountant, your CFO is helping design a tool or a system that will not only tell you, hey, there's a problem, but it'll tell you how to solve the problem. That's or, good. Hey, here's some suggestions on how to address it. Because I think when you have that, like you put yourself in a very good position to win as a business.
I agree. That's really, really good. I don't have it. I mean, mic drop. Like we're good.
So thanks for tuning in. Look out for more great episodes. And if you like the content, if what we said was very helpful, what I would say is share it with a friend. Tell others, because there are so many business owners that are struggling that need this information. And if you need our help, you can reach out to the tlturnergroup.com and we will be glad to help you out. Until next time.